Welcome back to Alpha Recap, your nightly wrap of the market's biggest moves. We're coming to you after the close, and as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. The theme tonight felt pretty clear. AI momentum keeps grabbing headlines while sectors diverged. Tech and AI names saw flows, lodging showed cracks, and insurers just didn't move in unison.
Yeah, markets closed with that sector divergence front and center. So, what really stands out here is Nvidia stayed a market mover, and Oracle made a CFO hire tied to AI. Two very different signals that point to the same story.
Exactly. Let's start with Nvidia. The stock finished the day up just under 1%, landing at about $177 on heavy volume, roughly 141 million shares traded. Those are active trader numbers.
Right. And the other thing is those heavy flows often do more than move a single name. They influence ETFs, chip peers, and anyone tied to AI hardware. Traders pile in, and it becomes a self-reinforcing story.
Analysts note that kind of liquidity can amplify sector-level moves. So when Nvidia sees those volumes, it tends to drag attention and capital into related software and infrastructure names.
And then Oracle announced a new CFO hire, Maxon, who came from Schneider Electric. The reporting tied the hire to soaring AI spending, basically signaling Oracle wants finance leaders who understand big, complex CapEx programs.
It's a little corporate positioning 101. Companies hire for what they expect to manage next. Oracle's move suggests they're bracing for larger AI-related capital allocation, maybe trickier guidance, and possibly more M&A activity.
I mean, when you step back and look at this, the combination of heavy Nvidia trading and Oracle's hire is more than coincidence. The market is centering on AI, and companies are adjusting in real time.
Yeah, that tracks. Momentum indicates investors kept focusing on AI hardware and the software stack, and analysts are watching for earnings commentary about AI spend and CapEx that could re-rate peers.
Switching gears, the travel and lodging story was the other major thread. Truist trimmed its price target on RLJ Lodging Trust, flagging demand concerns. They didn't publish the new target in that note, but the move itself signals downside risk tied to occupancy.
This is classic cyclical pressure. Lodging REITs live and die by occupancy, average daily rate, and RevPAR, revenue per available room. If demand weakens, distributable cash flow can get hit pretty fast.
Totally. And Truist's action is the kind of analyst signal that makes other investors start asking questions. Are we seeing seasonal softness or something broader tied to macro?
Analysts will be watching management commentary closely, occupancy trends, ADR, and whether booking windows are shrinking. Those details will tell us if this is a blip or a bigger demand shift.
Short reaction.
Not what anyone expected.
Now, on the insurance front, Morgan Stanley outlined a preference for Suncorp over IAG based on pricing growth. That's a reminder that insurers aren't moving together. Some are getting better pricing on premiums, which can boost margins.
Right. Pricing momentum matters for insurers because if you can raise premiums faster than losses grow, you get margin lift. So sector dispersion here is real. Underwriting trends and renewal cycles will create winners and losers.
And that kind of dispersion means analysts and portfolio managers will lean into relative value calls rather than blanket sector moves. Data suggests pricing differences can translate into earnings gaps fairly quickly.
Short reaction.
Big move.
Let's look at retail and consumer for a minute. Some smaller but interesting stories. Pressed Juicery launched a multivitamin plus gut health 10-pack at Costco nationwide. That's a distribution win that could accelerate trial and recurring purchases through a high-traffic channel.
Warehouse club placement matters. Costco can move a lot of units quickly, and that replenishment cadence is something brands watch closely. Combine that with FSA and HSA eligibility, and you get two nice demand levers.
On that point, health-ecommerce is pushing spring clean messaging and promoting FSA and HSA eligible purchases on its stores. The note said about 30% of households have at least one expired over-the-counter item, so there's a clear tax-incentivized push.
Exactly. The combo of scale, Costco's foot traffic, and tax-advantage purchasing can create outsized short-term sell-through, and reusable pack formats like 10-packs help create repeat purchase behavior, smoothing demand across quarters.
Analysts will be watching initial sell-through rates at Costco and replenishment orders. Retailer commentary quantifying that impact is always useful context.
Let's touch on governance and other smaller signals. These aren't market moving by themselves, but they add up. Boxwood Partners made the Axial Advisor 100 list. SP Global Mobility named Renato Negro as Chief Accounting Officer ahead of standalone reporting. Reunited Luxury partnered with the Face Foundation. And Simmons Bank said its Roundup savings program helped 25,000 customers save $5.9 million in 2025.
These are operational details that hint at bigger trends. SP Global Mobility, prepping for standalone reports, suggests governance readiness for independent disclosure. Simmons Bank's Roundup result shows product-led deposit stickiness, which can be a low-cost funding source.
I mean, when companies prep accounting and governance teams, that's often the precursor to spin-offs, divestitures, or standalone filings. Investors tend to reward clear, clean reporting.
Yeah. And ESG partnerships like Reunited Luxury's Face Foundation tie into brand building even if they don't move the P&L overnight.
Quick reaction section. 2 short takes from me.
Honestly, I was a bit surprised by this one. Okay, let's wrap with what to watch next. Analysts will be waiting for the full Truist note on RLJ to see the new price target and the rationale. Oracle filings, or investor communication, should clarify the CFO transition timeline and whether there's any guidance tweak tied to AI spending.
Also, keep an eye on Nvidia's trading patterns. Continued heavy flows could catalyze sector moves. And Morgan Stanley's full note on Suncorp versus IAG will be important to parse the pricing growth case.
On the consumer side, initial Costco sell-through and any retailer comments about replenishment are worth monitoring. And SP Global Mobility's timeline for standalone disclosures will be important for governance watchers.
Let's close with clear takeaways. 1. AI remained the organizing theme today. Heavy trading in Nvidia plus Oracle's CFO hire underscored that the market and companies are positioning for AI-driven CapEx. 2. Cyclical divergence showed up. Lodging faced demand pressure, while insurers displayed pricing dispersion, so sector-level analysis mattered. 3. Distribution wins and tax-advantaged channels are tangible near-term demand drivers for consumer wellness brands. 4. Smaller governance and product signals can foretell bigger balance sheet or reporting shifts later on.
And remember, this recap is informational. Analysts note the trends, but this isn't personalized investment advice. We're reporting what the data suggests and what market participants are watching.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.